Right. All right. So understanding of Forex, going over the topic, right? Because it's a foreign exchange market, buying and selling of currencies to make profit. It's open 24 hours and of course closes at certain times, right? Then understanding currency pairs, basically. No, the aim is to buy low, sell high. That's the essence, right? I just somehow I just feel you already have an idea about all of this, but let me just brush through regardless, right? Um, so more like in essence, when we trade currency pairs, yeah, we are let's say Euro USD, for instance, you are buying Euro USD. Apparently, you are buying Euro and selling USD. All right, so that's just like what it means. Right, that's just basically what it means. Um, and so let's say for Euro USD, right, the price is at currently at 1.16922. What it actually means is that Euro is at $1 and USD is at 1.16 whatever dollars. That's like €1 against $1.16. That's what it actually means. So if the price goes up, the base currency, that's euro, is stronger, right? If it goes down, the base currency euro is weaker, right? And there are, I think there should be euro index, but since dollar is like more of a global um exchange currency, that's why we look at it even more because it's still going down. You can see, like dollar is still going down regardless. I think I did this. I don't know when I did this markup, but dollar is still going down. Like the value is still going down. Right? So this is just the dollar index basically, and the more these guys get stronger, apparently, the weaker these other pairs appear. Right? So we see um we see this more like a tug of war, right? Just it's just one currency against the other. It's one if one is getting stronger, apparently the other will get weaker as well. Buyers are pulling up, sellers are pulling down, and that's just it. So let's go over to to trends. I would have loved to say that gold is also moving exactly opposite as the dollar index, but it's not always the case, right? Yeah, this is like the value of USD and the value of gold and the value of gold in dollars, but it doesn't always go opposite. That's what I've observed. Gold sometimes is just independent on its own, making its own moves without interfering, but sometimes it affects, but it's not always the case. It's not always the case, right? Not always the case. So we have trends, right? And retracement. So for like the longest time, looking at good right now, this is for our time frame from 23rd of March, right? Good has been on an uptrend, recovering from a serious downtrend it was on from um 2nd March, right? So from 2nd March, it's been trending aggressively down till it hits this lowest point of 4-1. But one thing also is that immediately it broke the psychological level of 5,000, right? If you look at these charts, there's a little bit of tussle here between buyers and sellers. The market ruins a little bit because 5,000 is a psychological price. Now, in that psychology, if price remains above 5K, that means there's a high probability that the market will still push up. But if it goes below 5K, that's just it. That's why when trading as well, we also need to have an idea about these psychological prices, right? And mostly since it's good, having looking out for prices that end with 00, right? 47, 46, 45, 4, whatever, 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 right? They also have a very good role to play. If you look at this zone here, this is actually close to 47, which somehow it low-key is a psychological price, right? Um, if you look over here, you can always see that, right? Because a price that ends with zero, 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 zero. In your analysis, you can also look out for that so that you can see. Of course, trends, uh, this course is taking me, but let's just be going right. Now, when it comes to retracements, yeah, retracements are basically temporal pullbacks, right? Retracements are not permanent. Like this is a 4 hour time frame. This is an uptrend. This move right here is a retracement. Now, someone trading on the lower time frame can decide to do what we call counter trend trade. Exactly. Exactly. Yeah, that is it. So now buyers are trying to push this in over and above 5,000, but it's still possible. There's still, but this will happen next week. It's not going to happen this week. Today is Friday. Looking at the NFP might, sorry, CPI might want to push it above 4.8, right? CPI might want to push it above 4.8 at least to end this week. Now, if Friday, if Friday's high, right, can take out Thursday's high, then we are looking at a bullish, at least a possible gap up on Monday, right? When the market opens with a gap, yes, if Friday can actually clear out Thursday's high, we're expecting a nice gap up on Monday, right? And for this trend to continue. But if it consolidates, maybe trying to take out this low, hmm, we just don't know, right? Now, that gap up that can happen on Monday doesn't mean that it won't come back to take out um, the high of Friday or maybe the low of Friday side before continuing. But to show a strong prospect for buyers on Monday, they need to push this guy above, right? So if we, let's see, this is last Friday, but this was Thursday. Wait, let me delete all of this. They are messing up my charts for real. Right, there's another one here too. Right. This is Thursday. What are this? This is Thursday, but it's Thursday last week. This is Friday. Yeah. This is almost an inside bar, but not really an inside bar. But one thing you understand is that the market closed below the high of Friday, though, but it was able to break that high. Price was pushed above. Yeah, this is like a great advantage. What happened next? Look at where this price opened here, closed here. On Monday morning by 12 midnight, right? You can see that gap between here and here. Right. This gap up shows that, okay, yeah, there's a high potential for a bullish move this week, right? And of course, markets will always cover the gap, certainly. It covered the gap, came back, pushed above. This is what Friday here. Pushed above, broke the high of Friday and closed back in. Then of course Tuesday market continued. If you just if you observe, let's check another. It's not always the same though. This is another Friday, pa. This is Friday against Thursday. Friday broke the low of Thursday, giving rise to a gap down on Monday. All right. So all of these are things I've actually studied here, not for good basically, but for stock indices, DAX and the rest. So and I observed that okay, this can happen on DAX or other indices. That means it's relatable to gold as well. All right. So to expect a gap up. Now the thing is just like how I'm not deviating from what I'm supposed to talk about. Just like how we trade or how we expect a gap up or gap down on US oil can also determine that for this as well, right? But I don't really trade that, but I'm just showing you an idea, right? Just showing you. Let's look out for another Friday. All right. This is it. This is Friday still, right? It couldn't break the high of Thursday, rather, it broke the low. Telling us that by Monday, there should be a gap down still, right? What happened? The market closed here and opened right below here. He had to cover the gap before continuing the trend. So that's it. So if you have to expect a bullish, you have to expect a bullish momentum for next week, right? Let's hope that CPI breaks this high. Sorry about that. Let's hope that CPI breaks this Friday high, this Thursday high rather, right? So that's just what I'm looking at. Though it's in line with what we're looking at. Like market is bullish, yeah. So it's in line. So that's just it, right? So back to retracements. Now, why do retracements matter, right? Retracements, they help you find better entries, right? And one thing is that the market never moves in a straight line, right? It's just like uh what was the best analogy for this now? When you're expanding a rubber band, right? You're expanding. You don't just continue expanding. No, it will come in a little bit, then go back. It's coming, go back. And if you've ever seen where there was a particular season when, okay, I think I'll use this one for instance, right? For 1, 2, 3, 4, 5. For the whole, right? For 5 straight days, yeah, there was a bearish momentum in the market. 1, 2, 3, 4. In fact, if you decide to ignore this, um, you decide to ignore this candle over here, which is a doji, which is almost an incisive candle. You can say that for 1, 2, 3, 4, 5, 6, 7, 8, 9. For 9 straight days, market was on a bearish move, right? So if it's like a rubber band, it will snap. Right? And whenever it snaps, the market will aggressively pull back. That's it. So the market can't keep selling. Just like when it was buying towards almost five. I think this should be the all-time high bar. Yeah. When we are hoping that it will get to 6K. Market was just buying aggressively. 1, 2, 3, 4, 5, 6, 7, 8. This one under bullish early this of course now this January, all right? Market just was just buying. In one day, imagine what the move the market made for 1, 2, 3, 4, 5, 6, 7 for one full week. It covered all and more. in 3 days. That's just to tell you that the market doesn't just keep buying. No. Sometimes we see this see this in the crypto market. One pair will just keep snapping, just say pump, 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 pump. It's good, but it's also risky, right? Because when it's gonna snap, it will clear out every damn thing. So you can see in 3 days, it took out a move the market made for. I'm talking about 1 week. This covered even this low. So for like 1, 2, 3, 4, 5, 6, 7, 8, 9. For like 2 weeks, more than 2 weeks, the move market made in 2 weeks, just 3 days move, cleared out everything. This is more like a reset in the market. So I'm just telling you. So if you're in that market that seems so sweet, ride it as much as you can, but ride with caution so you don't get taken out, especially in the crypto market, right? So types of currency pairs, right? This will also determine the kind of ones you trade. You have, of course, we have the Forex pairs. These are the Forex pairs, the GBP, Euro, blah, 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 blah. You get. We have commodities, gold and silver, basically. Gold is SAU, USD, right? That's good. All right. Then we have SAG, USD. This is silver. Now, for your information, if you think that gold moves so aggressively, go trade silver and see for yourself. Silver is freaking crazy, I tell you. Right. So then we have indices, right? Indices are the likes of Dow Jones, right? FTSE, DAX, S&P 500, Nasdaq, right? So then of course crypto now, right? So and also we have classifications or more of this FX pairs, right? FX pairs, they determine the ones you trade, the less volatile ones, the calm ones with low spread and the likes, right? Now, one thing about major pairs is that, sorry about that. If you observe major pairs like Euro USD, GBP USD, USD JPY, USD CHF, right? These major pairs, when you trade them on your brokers, but they have low spread and have like the smoothest movement. If you observe this, Euro USD, amazing movement, GBP, soft, USD JPY, the best of all, right? The movements are so smooth, right? This is because they are major pairs and they are highly liquid, right? They have high liquidity too, during opens, news events, there's always great movement. That's why we trade USDJPY majorly for news, right? There's high liquidity. They are major pairs, right? They have this, everything is stacked in your favor, right? Low spread, highly liquid, and this highly liquid is not what I'm supposed to say. High liquidity, right? Then for the minor pairs, that's where you see the euro, euro, JPY, right? Um, euro, GPP. GPP, JPY. Now you can see now these pairs are like a little step down and below the dollar, right? So these are like the minor pairs, basically pairs without USD, Euro CHF, CAD CHF, Euro CAD. You understand? These are like the minor pairs. Then we also have some other ones that we hardly trade. Um, I think there's one, Chinese yen, USD Chinese yen. Who trades that? Even your almighty Naira is still being traded too, but who does that? So we have USD, SAR. Let me even see if you see. Yeah, South African rand. Yeah. So these are like from developing countries. They are not highly traded like that, but they're still there for those that trade them. But for those that just observe, this one they are very volatile, like very volatile, and the spreads are crazy because no one trades them, right? So on this session, we understood um uptrends, downtrends, um benefit of what's it called? Retracements in the markets and what to do. Okay, I think I've not actually talked about what to do in a sideways market, right? I've not actually talked about what to do in a sideways market. Now, sideways market is simply decision being made. That's what happened right here within this our zone. That's why in the community here, this is more like a price trap. It's a decision. Sometimes the market stalls a little bit and there's a little war between buyers and sellers, right? Sellers wants to push the price lower. Of course, that's what they always want. And buyers are like, no, this is the best price for this market to sell to. It can't go below this price. Like, we are done. It can't go below this price. We need to push this thing back up, right? So that was why we saw this. I see this range. Market ranged. It's more like a price trap. So that's why we were able to take buys from the support area and sells from the in fact I attempted a trade. Yeah, this was the trade I attempted, right? On the 1 minute, I saw this. It's like one of the strategies I trade basically. All right. I got in around this area. I was taking out. And it doesn't occur to me, oh yeah, this is actually a clear ranging market, not like an uptrend, downtrend kind of thing, right? I would take for a better entry down here, of course, took my trade, right? So when you see a price trap, it's either you let it be or you trade it. And as you're trading, don't aim, let's say you're edging at this point, don't aim for the low. And just aim for the 50%, like half of the move or half of the range. Just aim for the 50% of the range. You're certainly to be good. Right? When the market gets back to the support again, aim for 50% on the range. This will make you not get taken out. But some persons want to aim for the low. Imagine you took a sell here, you're aiming for this low. Apparently, you get taken out somehow. Like, because market will play, come close, then boom, take you out. And it will make you wait for a very long time. You don't need that. Right? So ranging markets is more of a short-term trade, right? Then if you don't want to trade that, yeah, you can just wait for a breakout. Once a breakout happens, wait for a retest. Now, sometimes when it comes to break and retest, right, that is not always a perfect. That's when you trade um, a trendy market, right? When you trade a trading market, there's not always a perfect break and retest. Looking for a perfect break and retest is more like it's a mirage. Not like it doesn't happen, but if you're looking for that perfect, yeah, you might, hmm, it's a lot. So the market can do this, right? This is a zone. Market can break, of course, um, come back. Perfect. Market can still do this. This is still break and retest. Market can still do this. This is break and retest. So sometimes we miss good entries because you're waiting for that perfect retest. It doesn't always happen, right? Like in this very case here, you can see the top. This is like the top of this range. And when marking up your range, also just there's a rule we use those days. You are still um learning how to do markups, right? They say you pick the area with highest number of reaction. and lowest number of fake outs. Ultimate reaction. The body, the part that has most of the body, right? Most of the body, right? They don't just go picking like the tip. Sometimes this, and those they will trade and what's it called? HFX, right? HFX, the market can touch here, but by the time it dips into this area and coming up, your 5 minute trade must have expired and all, right? So whenever you're doing your markup, just know what you want. If you want to go for the tips, okay, settle for the tips. If you want to go for the body, right? Me, I always want the body, right? I might say, okay, this would be my best entry, right? Having um highest number of reaction, lowest number of fake outs. But in this case, I'd rather just stick with this. Right? At least I have two bodies that are like very, very good. I have the tips here, then a little number of fake outs here. But still, even if you decide to hit, okay, now on this very point, this is where you actually did the retest at this one point. But as a trader, you know that this one mark here is not enough to mark something as a resistance that was broken. No. Right? You want to bring it down here, at least to be more balanced, right? So as you can see, it didn't come back to this very point. Rather, now, if you have an idea about the market, you know that there is, I always look at imbalances. But maybe. So you can see that there's an imbalance right here, right? That's where the market came to respect this imbalance right here, this point and this point. Imbalances are like unbalanced reaction at the market, just like, I don't know, in chemistry, when a reaction is not balanced, it will keep reacting until it's balanced, right? So this is the market balancing out a reaction. So once this happens, this is also like a magnet. I always drag the price down. So once I see this, I'm like, oh, okay, fine. There's no need, right? Waiting for this was happening around here. There's no need of waiting for the price to get to this pure retest zone. This is enough retest for me. I take my buy from here. And of course, the market did real good, right? Market did real good. Market did real good, right? So I just need to point that out because I fell victim for that. I'm like, why will the market not come to my entry? I miss my entry by a few points, blah, 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 blah. But there are other things to look out for, other factors. We have other blocks, yeah, but I've not talked about any of that on any of my sessions, right? Perhaps on a very good day, I'll talk about it. Now, talking about retracements still. Now, on our 4 hours time frame, what did the market do? The market just, after making this push, right? It had to come back in still to push forward. Now, what's the point the market got to? What area? Like, what are you seeing there? Like, let me know if you're even following me before the session ends. The market did a reversal. What area did it tap into before going back? Or what area do you think this market tapped into before going back? Let me zoom this in out so that you can perhaps see what I'm seeing. Amazing, right? Amazing, amazing. Exactly. That's the imbalance, right? So once you're able to spot any of these and know them for yourself, then you're good. Now, this will give you a cue that no matter what, there's a high chance, yeah, and this market is going to be bullish, at least for today, or let me say this morning, right? Because first of all, it has respected this area, and yours is now to go down to a lower time frame I get the perfect entry. I'm going, right? So um that is it about Forex dissection. So now to dissect is wanted to now learn. Now let's practice. I think I have like 6 minutes left here. So let's dissect this and know where the market is heading to. We've already determined that, okay, yeah, this is a buy move, right? Though if you're looking at this point, it's more like this is a high, a low, this is like a lower high, but you know what we know, right? That is more like this is a pullback, and this market is actually going up, right? And it has respected an imbalance here, an FVG, and it's pushing up. So I'll head over to 15 minutes, and boom, there you have it, right? Now, your first cue here is you have we've had a series of, and one thing for a pullback on a higher time frame is a clear different trend on the lower time frame, right? There was a pullback on the 4 hours time frame, but on the 15 minutes is a clear downtrend. And when, sometimes we're like, okay, is a downtrend. When do I now enter my trade? Right? It's simple. When the trend changes on the lower time frame you're looking at. Okay, I can decide to choose this mark. So my point is, once this high here is broken, I know this is my cue that, okay, this trend has switched. I'll now wait for a retest. Then boom, enter my buy towards, of course, these highs. This is me analyzing this market now, right? I know it has given me a lower low. That's quite encouraging. But I'll need this high to be broken rather. And once it's broken, I know that must be a very good retest zone within for me to take my buy. So we don't just rush. Yeah, you can easily rush in, but now anything can happen. If the market decide to reverse, go back in here, it can win you in the court. You're like, what made you enter? You're like, I will tell you, see, this is like this is a clear downtrend. My high, I'm not taking out my high. So how would you assume I'm gonna buy? The market will win you on the court, right? So, but if you still want to like go down even more, you can go down like to 1 minute time frame. Look at it. So now it gets interesting on this 1 minute time frame, right? It gets interesting. Boom, we're having a series of, I don't know what I'm looking at, but what I'm looking at is interesting. On this 1 minute, we're having series of downtrend, downtrend, downtrends, and of course the trend switched here. Boom, you can see. Right. So if I'm trading on the 1 minute time frame, I would have entered like down here or somewhere around here, way, way before now, right? So that's it. The lower time frame has more opportunities. Then what am I looking at? On the 5 minutes time frame, high, low. I think apparently the same thing, right? So I'll simply wait for this one to be broken, then come back in. And I'm good. That's all I'm waiting for. That's all I'm waiting for. Looking at it, I have a target above here. I don't think it's nowhere even targets itself. Okay, I think I'd rather just target this high. This one, 4.8. That's what I'm just gonna target. I don't want to push much. So that's the thing. This one is taken out. Ouch, there's no rush. I'm certain that an AVG will be created here. Once an AVG is created, I'll wait for the retest. Then boom, target to 4.8. Have my stop loss below this low. However amount it is. So that's it. Then there's another approach to follow this too, right? Um, you can have what we call a buy stop order, right? So the idea is once this high is broken, then it's valid for a buy, right? You can just have a buy stop just above this price. Buy stop is market hitting a price and continuing, right? Buy limit. I'm just showing you before this call ends. Buy limit is market coming down from above, hitting a price and going. These are like limit orders. Sell stop is market selling from above and continue selling. How is it automatic? All right. Now sell stop. Sell stop is selling, continue selling. Remember, this mark is your main price. Sell limit is um, buy, then reverse. So just know this. I didn't I didn't just know it. I learned it and understood because I was confused too. So I know somehow some persons can be confused about what this limit orders mean, right? So like I said, you can actually set if you might not have the time to observe the market, set a buy stop above this price and allow it to run. Have for it as your TP. So it's gonna be something like this, right? Just above for it, SL right above you. So this is let's make it exactly 1.9, so almost 2 hours. So I'm just allowed to run risking 15 for 30 points. So that's it. All right, so that's it about it, family. It's an amazing day. Enjoy your weekend. Make sure to withdraw those profits and invest and enjoy yourself too. Right? So cheers. See you next week. Right? I think next time I will make our time for questions salary session. Right? I think that will help all of us. So I don't just stop.